All right, good morning, everyone. Tim Davis coming to you guys with a market review. Today is Monday, November the 20th, 2023, a couple days before Thanksgiving, and this is how our markets are shaping up. I'm going to start out by taking a look at the SPXA 200R, which tracks the percentage of stocks trading above the 200-day moving average, and then we'll move right straight to the VIX, and then we'll look at the index ETFs. We'll look at the index ETFs. All right, first of all, I'll start off here with the SPXA 200R. And oops, didn't do that. What I want to point out here is where the percentages are at now. And what I like to pay attention to is looking at areas of support resistance. So it looks like we are right back at an area of resistance as of right now, with the percentage hanging around that 50% level. The magical 50% level is where we get a normally the determination of whether or not we're going to, you know, hold strong, continue to go lower. I mean, strong, continue to go higher, or whether or not we're going to get a pullback. That 50% level is like the magical number that lets you know whether or not there's strength in the market to the upside or whether or not there's weakness to the market to the downside. Right now, it's at a standstill because we're right at a level of resistance, right at that 50 day simple moving average, with the 200-day simple moving average hovering right above it, that red line. Red line is the 50-day 200 moving average, and that purple line is my 50-day moving average. So we got a 200-day and a 50-day right around the price, right around the candlestick, with the candlestick hovering just below the 50-day moving average. So it looks like it's starting to run into a level of resistance after we have seen to have dropped below some level of support and rebounded a little bit. So this is going to be a telltale signal as to what happens here. So do we collapse and fall back down away from that 50 moving average, or do we march higher? This week is going to be a determining factor as to what happens with stocks as we head into the beginning of December. So we got to pay close attention to this level of resistance that we're running into with the SPXA 200R. This is going to dictate what happens to the overall market, depending on what this sentiment tells us. So we could be getting a rejection right here. So that's something we need to pay attention to as we go through the end of this month. So that's important. Now let's take a look at the VIX, and I'm looking at the weekly charts too, folks, because weekly charts are starting to show us some strong views as to what the overall market is telling us. Let's go straight to the VIX. Okay, and the VIX is giving us some signals too as well. This is a weekly chart of the VIX. We had this strong rejection over the past week or two, right at that 200-day moving average. Let me get you. So the VIX traveled up, bounced away from that $13 level, up to that 50-day move, 200-day moving average, which is where it ran into some resistance and came right back down. And now we're hovering around an area of support. So we started to peter out here at this support level, and looks like the support level that we're hovering around has been a strong level of support, as you can see by looking at this. So every time we have got down to this level, we have seen to either consolidate or get a bounce. Last bounce was a significant bounce back up to the 200-day moving average, but we could not break above it. So now we're back at this level again. So do we consolidate here again, or is it time for a bounce? That is to be determined. But if you look at the full stochastics, it is hitting oversold territory already. Wins percentage already in oversold territory. CCI, you got a wide divergence between the K line and the D line, and looks like green line looks like it wants to curl back up. So this is very positive for the VIX. This wide divergence we see here between the K and the D line, because normally that is a sign that we could see a reversal in the very, very near future. So need to pay very close attention to that. Looks like the VIX wants to get a bounce. So that's something to pay close attention to. And just for the VIX itself, we're going to take a quick glance at the current daily chart of the VIX. Here's our current daily chart of the VIX, and as you can see, it's in oversold territory. So it's looking more and more inevitable that the VIX is gearing up for a bounce, folks. So all you long lookers who are looking to take the market long, just remember we're still in this bear market, and we have not seen a new high in the overall market in a very, very long time. So keep that in mind too as well. But if you look at what's happening here on this daily chart, you see price action like it's ready, according to the wins percentage, to come out of this oversold territory. CCI also showing the same thing, like it's ready to come out of this oversold territory. And you see it's like we have stalled out at a level of support. It's like the VIX is ready for a bounce. So we could be in store for a massive bounce in the VIX. Is something to pay close attention to. All right, now let's go straight to the S&P. Looking at the SPY, we're going to look at the ETFs today, just the ETFs. And again, I'm going to just look at a weekly chart because the weekly chart is starting to take out a lot of the noise. Okay. Here's a weekly chart of the SPY. And again, look what's happening here. We're hovering around an area of resistance. Right around an area of resistance. And I'm going to take a look at the CCI. Again, a wide divergence between the K and the D line normally is a sign that we're possibly about to see a reversal in price action. So pay close attention to this on this particular week. These next 2 weeks, we could be about to see a reversal in the SPY with price action hovering right around level of resistance. All right, let's go to the diamonds, DIA. Same scenario. Same scenario, folks. Hovering right around a level, strong level of resistance. Hovering right around this level of resistance. With the CCI showing a wide divergence between the K and the D line, which is normally a sign of some type of reversal. So something to pay close attention to. If you're long in this market, be very, very careful. The prices are hovering at an area where we could see reversals in the opposite direction, reversals for the overall markets, reversals in the VIX. So if the overall market's about to reverse lower, the VIX like it's about to reverse higher. So just telltale signals as to what we can expect moving forward. Look at triple Qs. Same thing. And it's even a more telltale signal with a couple of other indicators. Look at the wins percentage in overbought territory, and like we're starting to see a hinge and oscillate like it's ready to hinge lower. Wide divergence in the K and the D line of the CCI like it's ready to hinge lower. And price action right at levels of resistance. Right back at a level of resistance where we have seen reversals. So we could be about to see the same thing that we've seen in the past, reversals at this level. One last one we take a look at is IWM, which has been the weakest of the bunch, and it continues to be the weakest of the bunch. With price action been struggling to even, see, significant continuation in these rallies, unlike the rest of the market. And since the IWM has got around this 200-day moving average, I'm going to say it has really been a struggle. Every time it has these strong rallies, a lot of folks think it's doing something, but look at where price action has pretty much been hovering at around for a while, right around the moving averages. Since the moving averages started to converge. And that's really been a strong signal since the moving averages, since the 50-day and the 200-day started to converge right around here. The movement in the IWM has been muted and tight, and it's been trying its best not to fall far from the moving averages, but it's been struggling. So now where we at? Now we finally broke below it, below both here in a stronger way than we did here. Broke both, below both, got to rally back up to it, and look what it's doing. Running into the 50-day and just below the 200-day, running into resistance. So the key is does IWM break back above the 200-day and the 50-day, the major way this week, and show some strong, movement to the upside? I am a doubter in that. That's just my personal opinion. I'm a doubter. I don't think we're going to see a breakout here because we really haven't seen it. We've been seeing it every time we get a rally up. We've been seeing strong pullbacks back to the moving averages, and it has been unable to sustain a big move well above those moving averages for a while. And now we're below it. Now we're challenging, if we're going to break back above them. So that's something to pay close attention to this week. If for some reason IWM does not find a way to get a strong push back above the 50-day and the 200-day here on this week, we could see a major reversal. And that major reversal, if we do see one, could definitely threaten to take out this low here. And if we take out this low here in IWM, folks, we could be in store for a major pullback. And if we draw this picture out and look a little bit further, I'm taking a look at the monthly charts. Let's do this real quick. Draw this out. If we fail, right where we're at now, this is what's shaping up. So really got to pay close attention to these markets as we head to the end of this year. So price action on the monthly chart, look at it's hovering just below its 50-day moving average. Okay, you've been struggling around this level for a long time. Since the beginning of 2022, we've been struggling around this 50-period moving average of the IWM for a very long time, and now we're right at it had a strong drop below this 50-day, and then we're trying to get back above it on a monthly chart. If for some reason we get a rejection here, folks, look at what we're looking at. Look at what we could be facing. Look at what's the next big significant pullback area. There's a wide divergence in the monthly chart between the 50-day and the 200-day. If we break below this level, it's nothing but space between price action and the 200-day. Okay, on this monthly chart, which would take us back to the 2020 lows, folks. So the IWM, I'm really paying close attention to what this IWM does. All right, so pay close attention. If we, I'm have to put a price on this one that we really need to pay close attention to. So let's go back to our weekly. 161. Pay close to this 161 level. I would say 160. If we get a break below 160 on IWM anytime soon, watch out below because we could be heading towards the 2020 lows. All right, folks, that's all I have to offer you guys this weekend. Hopefully this is something that you guys can use and enjoy the rest of your week, folks. And if I don't get a chance to record another video before Thanksgiving, happy Thanksgiving to you all.